the consistency of a method. So here, how strongly you believe in this Fibonacci method? I have asked this question. Out of 148 people, 88% of the people voted for this survey. I am just closing this survey, and 58% said that I strongly believe. 39% of the people said that I moderately believe on this thing. 3% of the people said that I never believe on this particular concept. However, majority of the people, either they said they believe on this principle, or major one segment said that they moderately believe on this particular principle. So now come back to this particular subject. So what is this particular Fibonacci principle is? So it is a method by mean of which you can able to understand the market trend or the behavior of the traders, what they are going to show in a particular market condition. So to judge the behavior of majority of the traders, we have three beautiful principles in the technical studies. One is Fibonacci, second is Elliott, third is the W.T. Gans principle. Besides these three principles, no other principle is available in the technical study which gives you a clear picture what the majority of the traders are thinking at a particular time. That is why this technique is very important. So what is Fibonacci ratio? I will tell you. How many types of Fibonacci techniques present? I will also tell you. But it is not possible for me to go through all the techniques of the Fibonacci. Today the technique what we are going to learn is only the retracement technique in the static and dynamic approach. However, with your self-interest, you can able to learn other techniques of the Fibonacci. So Fibonacci ratio, whenever we are saying about, so origin of this Fibonacci numbers is very important to know. So many of you, if you have gone through the web search, you would have found out that Leonardo Fibonacci is one of the person who has invented this number sequence of Fibonacci. And the importance of Fibonacci ratio is because of its natural presence, like the petals in a flower arranged in the Fibonacci number sequence. Your human body also, the body length from your navel to head and the head to from the navel to toe, it is also maintaining 1.618 retracement. Circumference of your head, that is also presents in the Fibonacci sequence. So lot many natural objects presents in this universe which follow this Fibonacci ratios, and this Fibonacci ratio relationship is very important because this relationship gives you one indications that how traders will behave at a particular support breakout or resistance breakout. So that is why it is very important, and name of those ratios also there. So whenever we talk about 0.618 retracement, so this is known as your one step alternate ratio or alternate ratio. So one step alternate ratio or alternate ratio means whatever the Fibonacci number you are taking, divide with the Fibonacci number which present one step ahead. So by this process you can able to get the one step alternate ratio 0.382 retracement. This represents the, so 34 by 89 we are talking about. So here 0.618, if you say that 0.618 represents, so 34 is a number, 34 divided by 55, and one step if you go above, so one step alternate ratio is 0.382. Same way 0.236 also two step alternate ratio, 0.14 also is one of the Fibonacci ratio. Then below this line of 1, whatever the ratios you are getting, all these ratios are Fibonacci ratios. Above this line of 1, whatever the ratios you are getting, these are known as the inverse or inverse Fibonacci ratio, 1.618, 2.618, 1.236, like that. So these ratios having a infinity presence, however out of this ratios, only few ratios we are using for the Fibonacci study, or the study of our, or the study what we want, we are using only a part of this Fibonacci ratio. So coming to the subject of this Fibonacci ratios, you have now saw how these Fibonacci ratios are got derived. Then the techniques what we need to implement in our technical studies or the technical analysis are parallel projection, growth projection, expansion, and Fibonacci retracement. So these are the four studies associated with the Fibonacci ratios directly. Then indirectly we have three studies: Fibonacci fan lines, Fibonacci arc, and phi ellipse. So these are the indirect studies of the Fibonacci. Or here graphically we present specific Fibonacci fact on your price time chart, and we used to draw some conclusion on the trend analysis. So this is what we used to do, and using this Fibonacci ratio you can able to make short term trend forecast or short term investment decisions. You can also able to take BTST trade decisions. You can also take intraday trade decisions. So these are the decisions, different decisions you can able to take using the Fibonacci. So how this Fibonacci retracement is used in a traditional method and how it is being used in a dynamic method. So these two things you are going to learn now. So these two things you are going to get now, that how these two different approach of the Fibonacci ratio we are going to implement. So in the traditional method of a Fibonacci retracement, what we used to do, we used to find out the high and low difference, which is known as your price range. We need to multiply it with the Fibonacci ratio to get the Fibonacci price range, and we need to add it to the low to derive the resistances, subtract it from the high to derive the supports. So this method if you are following, then it has a success rate of a maximum 50%, which none of the technical studies gives more than that. However, because it is historic in nature, you are calculating a price range which has already happened on the chart. You are just estimating the difference, and from there you are projecting. So let me explain it how you can calculate this one. So how you can calculate this one. So for that, whenever you are taking about how you can identify a trend based on this particular ratio. So whenever the price crosses above 0.236 retracement, we used to say that it sets a trend. It's just a beginning of a trend, and it confirms the trend if the price moves above 0.382 retracement. And 0.618 to 0.786 is known as the death zone. From here, maximum possibility of a trend reversal is there. That's why it is known as a death zone. And once it crosses that 0.786 retracement zone, it is to enter to a expansion zone of 0.888. Post expansion zone, there is a growth zone which is known as the 1.236 to 1.618. So in this particular concept itself, I have told you the entire method of the Fibonacci. Whenever you believe from 0.236 to 0.618, it is known as a parallel retracement method, wherein 0.618 itself you say that this calculation is valid till 0.618. Beyond that, I am not going to believe it. So whenever you believe the retracement ratio till 0.888, it is known as you are believing till expansion. Whenever you are believing this ratio calculation till 1.618, you are believing on the growth retracement concept. So this is how the retracements are being classified based on parallel, expansion, and growth. Ratios are same. So in the traditional method, we used to take the high and low difference and multiply it with, and we used to get some outcome. So let me take for the 6th April, what are the things has happened. 6th April, 7653.8, 7603.45. So these two values I am going to put it, 7653.8, and the low was 7603.45. 7603.45. 03.45. So this is the difference is 50 points. So this 50 points, whenever I will be multiplying with 50.35, so this is the point I have got it. So 50.35, the Nifty future I have multiplied. So these are the Fibonacci price ranges I got it, or the ratio price ranges I got it. So I have to subtract from the high. So my high is, for this particular method, 7653.8. This is the high. From here I have to subtract, and the low I have to add. So first I am just adding it, the low 7603.45. This is the low, and I have added these particular things, and similar way I have to add in all the cases. I have to get all Fibonacci ratios, Fibonacci price resistances and supports. So same way I have also subtracted from here 7653.8. I have subtracted, and every place I have subtracted this, and I got all these levels. This is for the, I am taking for 6th April 2016. This is the value I am taking. So based on this, I have to make some estimation for 7th April and 6th April closing. It is showing me 7634.7, 7634.7, 7634.7. This is the closing. So if I compare these things, I have, there is a opening, there is a low, and I settled here. So in 0.382 of the downtrend, I have settled for the day on the 6th April. So next day, what is the call I have to take? So here, whatever the value you are getting here, 7634, similar thing you will get it here also. 0.3618 also is going to give you the similar kind of calculation. So it says, next day, what is the estimation? How you can get these estimation? For next day, which is falling on the 7th April, if price fall below 7622, this is very important for if you are following any traditional Fibonacci method without following my method of dynamic Fibonacci, how you can estimate. So you have taken 6th April's high and low difference, last traded price is near to 0.38. Now this conclusion is being drawn for next day 7th April, how to take a trading call based on this particular calculation. So which is falling on the 7th April 2016. If price fall below 7622.68 or round it to 7623 and manages to fall below 7614 below, then you can say that expansion and this growth can happen. Expansion and growth can happen, and you can expect till 7542. Similar argument also holds good here, and if the price manages to cross 7643 above, then the expansion and growth can able to take till 7685. So this is what it is telling on 7th April, which is falling today. If the price manages to cross below 7614, I will be selling it, and my expectation will be till 7572. If the price crosses above 7643 in the growth side, then I will be buying it, and for my expectation of this will be 7684. And this is based on the traditional Fibonacci method. I have not added the component of volatility into it. I have just taken the calculation from a high and low. I have just taken the last traded price where you have ended, and then after I have just done these things. So this is the method of applying the Fibonacci sequence. You can read any book on the Fibonacci. This is the technique you got. This is how you should utilize the traditional way. However, whenever you are going for a dynamic principle, this entire calculation changes. However, this also is valid. So this is also valid. If you see today what happened, you opened at 29, 34 you have gone. No way you have touched that higher level. However, you have come to a low of 7555 and close at 7566. So very much you have penetrated this 72 level. When you come to this dynamic principle, it is little different. So how it is different? Dynamic principle, I'll be taking the volatility. Daily volatility I'll be taking into confidence for calculating the price range. So I have changed here. Instead of taking a high-low difference, I am taking the daily volatility, and that is only giving me the price range. So price range calculation is got changed. And multiplying with the Fibonacci ratio, same thing I kept it. No change in the Fibonacci ratios, no change in that method. Instead of adding it with the low and subtracting it from the high, I added with the previous day's last traded price and subtracted from the previous day's last traded price. This is what I have done. If there is a, and here is a rule, if there is a gap up or gap down above that 0.236 point of my calculation, my trend set point, if there is a gap up or gap down happens which is above or below my trend set point, then I will start the calculation, or the calculation I'll reject this last traded price and I'll be taking the gap up or gap down price point into confidence for projecting the trend. So this method increases the success to a 70 to 75%. That is what it does. So if the same calculation I am going to do, and I'm just taking, for a simplicity, I'm just taking the NSC data reference for volatility information. So any future instrument you can find out the, from the NSC you will find out its daily volatility 1.10. Though it is not the correct estimation of volatility, however you can take it. 1.10 I am taking it. 1.10 I am taking the volatility. So 1.10, then I'll be taking the last traded price. So last traded price is here. So 1.10, and previous day it has closed at 7634.7. So this says 83 point of oscillation is expected and 83.98. So this 83.98 I am multiplying here, 83.98. So this is the dynamic principle I am showing you, and after multiplying this 83.98, now my Fibonacci price points will start from 7634.7. So here too my calculations of addition and subtraction happening from a single point, 7634.7. 34.7. So this is the last price I am taking, and based on this all other calculations I have done. So this is done. Now the 7634.7, this two also 7634.7. So subtractions and addition is happening from a single price point. This is what I have done. So once this particular part is done, my trade entry points also will have the similar kind of things. If it is opening today on the 7th of April, if it is opening at 7654 above, I'll be buying. If it is opening below 7615, I'll be selling. Or any point during the day, if it falls below 7615, I'll sell. Any point during the day, if it moves above 7654.5, means rounded to 7655, I can buy. So this is what I am going to do for the trade. And once I am buying it, my first target is here, second target, third target, and all these targets of 0.88, 1.236, all these targets I can get. So if you can observe from here, you have a low 55, which is just penetrated your 0.8, which is your growth target. Just 5 point below it you have penetrated. And if you just observe the opening part of these things, you have opened at 7629, high 7635. No chance you have got this prices to means buy. Here low is 55. Very much you have penetrated most of the targets, and you have closed at 65.5 and 66.5 last traded. So this also near to your death zone price. And entire day's chart also, if you can look into, you will find out a very close relationship of these prices acting as a support during the move, and very close relationship of the high of the day, very close relationship of the low of the day, very close relationship of the close of the day. So this is the difference between the dynamic principle and static principle. Without compromising with the Fibonacci ratios, just it has enhanced the profitability and enhanced the accuracy of this particular level. However, the major catch in this particular principle is, if your volatility estimate is correct, then your targets and other parts of the calculations also will be correct. So in most of our softwares, we have used this particular method of dynamic Fibonacci principle. We have used dynamic Gann, dynamic Elliott, all this principle. One standard deviation also is one of the presentations of Fibonacci along with the one standard deviation formula. So this increases the accuracy. Never compromise with the, without corrupting the Fibonacci sequence. I have not used any new ratio here. I have not said that no, this is the ratio you should use. The ratio what we have used, it is Fibonacci ratio. Without compromising with that, we have just estimated this particular things. So this is the difference of the dynamic Fibonacci principle and static Fibonacci principle. And if you can look into our 1SD estimates for the day, 1SD estimate for the day, you will get it, because the volatility estimate is entirely different and the volatility gives a great part of your success. So here it says a different thing, 7622 below, you can sell it off, and last target it is setting at 7548, and you have just missed the last target by some couple of points. However, you have penetrated 4 level of Benz targets in the Nifty future, and similar kind of things you can observe in the Bank Nifty also. Bank Nifty, this is the 1SD calculation it has given, and 15,505 was the low of the day, so which was very close near to your 0.888 retracement level. So this is how the dynamic principle of Fibonacci enhances the accuracy of this particular method, and those who are the user of our 1SD software, they will be realizing the benefit of that things. And on this Fibonacci principle, we have a designed course wherein all principles of Fibonacci is being written by me in a book called Fibonacci Method. I have designed a 3 DVD course wherein various principles of Fibonacci I have explained in the audiovisual tutorial, and you will be getting one manual edition software wherein you can punch the data and see all those Fibonacci parallel retracement, and only for practice purpose that software is being designed. This is a manual edition wherein you cannot take much trade advantage, however you can practice different principle in that. So, and this is, most of our products are listed here. So regarding any product related queries, you can call in this number which is given here. Any subject related queries, you can. Definition of stop loss. Stop loss definition means the price point where the trend will change, you book the loss there and come out. Definition of stop loss is never said in any of the literature, any of the book, or by any of the expert. To please your mind, put the stop loss 5 point below. To please your mind, put the stop loss 10 point below. That is not the definition of stop loss. If you follow that definition of stop loss, that to please your mind, put a 5 point, 10 point, then you are not following any of the method. Do not follow any method. Follow your own principle. You will realize your success after 2 or 3 years of trading. I cannot say that if that is the definition of your stop loss, put a stop loss where your mind permits you to put 5 point below, 10 point below, 1 point below. If that is the definition of stop loss you follows, your existence in this trading career will be maximum for 5 to 6 months or 1 year, not beyond that. So definition of the, whenever you follow any principle, follow it originally. Definition of stop loss says that where the trend is going to change. So here the trend is changing at 7654 above, 55 above. So why should I put a stop loss to please my mind at 7620 or 21? So if this is the thing is, I am saying that Why I should take a 40 point of stop loss? What is the basis of this? Then I have to do some risk management. What is that risk management? In the simplest risk management which sell Nifty at 7614 along with buy a call at 7650 strike. This is the simplest risk management. If you do not buy a call in the beginning part of the series, you are thinking that no, it is too costly. Nothing wrong. You can sell a future at 7614 and sell a put option of 7500 because maximum you are going to achieve till 7500. Sell a put option, take some premiums to your pocket. If the stop loss triggers here, then this premium of the put option also will decay. So instead of 40 points of stop loss, you can manage this stop loss to a point of 10 to 20 points so that you will be in a comfortable position. So you can manage your risk, but you cannot dilute a risk. So managing a risk is different, diluting a risk is different. If you are following a principle, follow that principle but manage your risk. So do not ever dilute a risk. And what you are seeing here, it has a two options here, one native mode and web mode. Native mode, you are seeing those things on your screen here, and if you are opting for a web mode, then you can get this same result reflected in a web page. So from where the calculation has started, all the information you will get, all ratios you will get, 0.888, 1.618, these ratios also you can get it here. We have given a brief description that how to trade with one hedging, how to trade with the hedging. So that description also you can find it out. And it has, besides this analysis of your things, it has one feature of to check your previous analysis. If you click here, it will take you to a page wherein you can log in. Your user ID and password will be reflecting, so you can log in. So in a day, what are the trades you have done, or what are the analysis you have done, that you can see. So here some backup data we are giving, so that you can able to test, you means you can preserve your trades and you can refer it afterwards. Or if you have taken a reading and gone out of home, then you can access this particular page, log in and see what are the levels you have calculated. So that feature also happened. So herein you can able to check your old analysis also. So all this analysis you can able to check it. So these are the features of this particular software, and you have all the segments: equity, index, currency, commodities enabled. Also you have an option intraday also you can able to do here. So you can able to do the option intraday trades also here. So this is the benefits of this particular tool. And once you are doing for the option, so the process is very simple. You have to load the data and just go for a calculation. So you have to go get that trend. So this is the trend for the Nifty, it is coming. And post which you have to choose any of the strike you like. So you, if you are choosing 7600 put option, so go for the put option and check for 7600, and premium, current premium it is coming, you have to calculate here. Once you calculate, so where you should buy, currently at 121, because it is the end of the market, so it is not reset so far. So once it is reset, you will get the actual value of the premium where you should buy, and what will be your stop loss and what will be your targets. And besides that, you will get the information about the option Greeks also. Query to purchase the orders, you can call in this particular number. Any query on subjects, you can email me at admin@smartfinance.in.